Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Thursday, January 11th. Let's take off. First up, Bitcoin ETFs stir optimism, ambivalence, and dread among crypto's staunchest supporters. They make the asset class less of a scary concept to mainstream audiences, Bitcoin advocate Jameson Lopp said. So there's a lot of conflicting opinions from different people in the space on whether the ETFs are actually a good thing or if they're not a good thing. In my opinion, I think that they are a good thing. They offer more optionality for the marketplace. They allow people who normally wouldn't necessarily want to go through the steps of holding their own keys to sort of have passive price exposure in their portfolios, right? So it'll sort of onboard more people. And when you hold something in your portfolio, you tend to want to learn more about it. So I think it's sort of like this gateway to allow people to sort of go down this rabbit hole, right? Obviously, the gold standard and part of the beautiful part of Bitcoin is you can actually self-custody the asset for yourself. So this is a beautiful idea that you can have this true custody of this sort of this digital money, right? Where nobody can take it from you, nobody can stop you, nobody can censor you. It's this beautiful idea for the digital world, which leads us to our next story here. Coinbase's market dominance challenged by new wave of Bitcoin ETFs. The US-based crypto exchange Coinbase is facing increased competition and potential challenges to its market dominance following the approval of spot Bitcoin exchange-traded funds in the US. Notable asset management firms, including BlackRock, Franklin Templeton, and Wisdom Tree, are set to enter the digital asset ecosystem with Coinbase as their chosen custodial partner. While Coinbase stands to benefit from custody revenue in the short term, analysts have expressed concerns about the potential impact on the company's core transaction business, CNBC reported on Wednesday. My take on this is that this is largely a good thing for the space. I think it's an additive thing for more people to have access to acquire Bitcoin in different ways. This idea that it's going to compete with Coinbase, I think is a little short-sighted, right? People that are buying Bitcoin on Coinbase are already sort of down the rabbit hole a little bit, and they're getting direct exposure to the asset itself. A lot of those people are, taking their own control of their keys and their own custody. They are, buying on Coinbase and transferring to cold storage and stuff like that, and including active traders as well. So I don't know if a passive ETF really competes with that. And also, I think Coinbase is benefiting greatly here from being the custodian that all of these ETF wrappers are sort of using. So I think this is in the long term, this is a sort of additive thing for the ecosystem as opposed to a detriment on their business. I think, the more people that acquire Bitcoin through an ETF, will slowly hold the asset, and they'll probably want to learn more about what they're holding in their ETF, and then they might go down the rabbit hole, right? So I think this is a largely additive force here as a detractive force. So I think that is my take there. Let's move on to our next story here. The crypto world is losing its mind over the SEC's X debacle. Web3 was not pleased when a much-anticipated announcement turned out to be a fraud. We've hit this a couple times, but it just sort of goes to show the absolute incompetence here from the SEC and from Mr. Gensler. They botched this whole thing on so many different levels, losing access to not having 2FA on their Twitter account, losing access to it. Meanwhile, lecturing. And here's a funny tweet I found. This is Gary Gensler saying, "This is a reminder to secure your financial accounts as well as protect against identity theft and fraud. Remember to use strong passphrases or passwords, set up multi-factor authentication, keep account alerts turned on." And here is Zach XBT sort of chiming in on this, just kind of repeating his words to him. I mean, I think it's just the hypocrisy level is it's literally comedic here. You cannot make this shit up. But this is what we're dealing with here, folks. I mean, this is what's, these are rules for me, but not for thee. This is a perfect example of that. And we've seen a lot of that in the past 4 years, right? The past 3 to 4 years from the botch of, the Twitter account getting hacked and potentially posting a draft that they already had in their folder to, releasing the documents for the ETF approval on their website. Before they actually officially announced it, and then having to sort of take that off. And I mean, just absolute disaster. Let's move on to our next story here. South Korea reiterates ban on crypto ETFs despite U.S. approval, report. Interesting take here. South Korea looks like they are not going to allow ETFs yet. South Korea's top financial regulator said today that it will stand by its rule that restricts financial institutions from launching cryptocurrency exchange-traded funds, local media reported. We've seen a lot more of investment and pro-crypto-friendly Web3 stance coming from the Asian world, places like Hong Kong, Singapore, Japan even. So it's a little surprising to see this, but it looks like they do have a plan here for some actual well thought out regulation. So here at the bottom, it says South Korea is developing a two-part crypto regulation, with the first part passed last year and set to go into effect in July 2024. It is constructing the second part of its Crypto Act, which aims to set clear rules regarding the issuance, listing, and delisting of cryptocurrencies. Kind of goes in theme with a lot of the stuff we talk about here with different countries. Like yesterday, I think we spoke about Turkey, and laying out a crypto framework. And I think we're just going to continue to see that as we sort of get more mainstream adoption, and as countries don't want to miss out on the opportunity for growth. And we're just kind of at this inflection point and moment in history where, just sort of like where the internet was, maybe 10, 20, 25 years ago. We're kind of at the same point with, Bitcoin and Web3. There's going to be a lot of revenue generated, a lot of jobs created. So countries that are smart and, capitalist and, pro-business, they're going to want to take advantage of that. Next up, I thought this was a cool story. Hestiia wants you to mine for crypto to heat your house. So essentially, this would sort of use older, sort of outdated ASIC chips. It'll sort of replace kind of like fossil fuel heating. So they want you to sort of run these. These are almost kind of like miners that are using older tech that have sort of been outdated. And here's a little video of it. And they'll put these ASIC chips inside this heater, and this heater can use electricity as opposed to like fossil fuels to heat people's houses, right? So interesting, cool, looks really, really neat. You can see this here, and a lot of it will be very, quiet too, because it'll just be sort of in the background, heating your house in a colder climate. So interesting collaboration here with a proof of work. And again, if you're running this miner in your house, you're also contributing to Bitcoin. You're contributing to the security of this open source network. So, and you're getting some heat. So kills two birds with one stone. Japan to launch flying solar 5G stations in 2025. Japan is developing flying solar 5G stations that will fly to the stratosphere to provide wider internet coverage worldwide. These high-altitude platform stations will link more remote areas previously unreachable online. Telecom Group SoftBank demonstrated its capabilities by facilitating a 5G call between Japan and Rwanda. Super cool. I think, you're going to see more and more of this. A lot of people, some people come to me and say, oh, they're going to shut down the internet and do all this. There's no way to shut down the internet. We've got, Starlink and satellites in space, all around the world, going around the atmosphere, projecting internet for people. Now you're going to have these 5G, solar stations that are just going to continue to sort of fly all over the world and blanket the earth with sort of internet coverage, right? So you've got physical infrastructure of cable in the earth. You've got Bluetooth, mesh networks that are forming like helium. So I think that you're just going to see a more robust, decentralized internet, which is a beautiful thing. Finally, let's take a look at some takes from today, some X takes. Bitcoin Magazine posted here, just in, $7 trillion Vanguard blocks clients from buying spot Bitcoin ETFs on their platform. Fascinating. I think ultimately the free market will make a decision and will decide, and, people will, pull capital from different companies that want to block access to products, right? Julian Ferrer here says, just transferred my 401k from Vanguard to Fidelity. It took about 15 minutes. If you have an account with a broker currently blocking access to Bitcoin ETFs, close it and get out. Make these boomers hurt. Can't agree more here. The free market has an option. If you got, your investment account custodian blocking you and telling you what you can and can't invest your money in, vote with your feet, move your funds. Marty Bent, such a shit show of a week in the best way possible. SEC fumbles the announcement, validating government incompetence, which we've discussed this at length here. Money managers blocking people from buying ETFs, proving that trusting your money with trusted third parties is a risk. Yes, definitely. Self-custody and holding your own keys is definitely the preferred option, right? Daniel Roberts. There's a major issue with Bitcoin ETFs which few are acknowledging. We've never had an ETF where the underlying has a limited supply. If ETFs buy the 30% of available Bitcoin, or those holders also refuse to sell, then we have a major problem. So here's a cool chart. It shows sort of like since Bitcoin's inception or a little bit after, it sort of shows, liquid versus illiquid supply, right? And this illiquid supply is basically Bitcoin that hasn't moved in over a year, right? It stayed in its same wallet, where you have liquid supply of Bitcoin that's moved in the last year. So you're sort of seeing this illiquid supply increasing, people holding, hodling their coins, storing their life energy in this debasement protected asset, right? With this absolute scarcity. So I think eventually this will come to a head, and where you're going to see a supply squeeze. I mean, it's just math. Most people don't even know what Bitcoin is, let alone a spot ETF or the halving. They don't know what 21 million means. They haven't a clue about the difficulty adjustment, and they don't know that BlackRock signals the entire market. You are the 1%. Interesting take there. Bitcoin Magazine. Total spot Bitcoin ETF trading volume surpasses 3.5 billion according to Yahoo Finance data. Day one. Some serious volume. Sir William of Rotherham says here, Gary didn't want the ETF. Jamie didn't want the ETF. Liz didn't want the ETF. Joe didn't want the ETF. Larry wanted the ETF. Who's in charge around here? Larry didn't want it either, but he was smart enough to surrender, says Mr. Aaron Johnson. Actually, credit goes to Grayscale, who wanted it bad enough. They sued SEC and won. Thank you to Grayscale for, exposing the arbitrary and capricious nature and actions of the SEC, and basically forcing their hands, right? So that just goes to show the resiliency of Bitcoin as an asset, right? You have this entire administration, the cabinet, sort of everybody, going against trying to prevent people from having access and optionality. And yet here we are, the court system and the separation of powers sort of paved the way for this, right? The risk of electing a Dem POTUS and Dem Senate cannot be overstated. End of crypto in the U.S. until 2030 if things go the wrong way. Stay vigilant. Here's this clown commissioner, Caroline A. Crenshaw, dissenting here. From approval of proposed rule changes to list and trade spot Bitcoin exchange-traded products. Clown world we're living in right now. But he might be a little over-exaggerating here, right? Because look at all of the stuff that's been laid in the way here, yet we're still pretty much right where we need to be, right? They tried to block us, they tried to stop us, but you can't stop this, right? You can't stop this technology. You can't stop this movement. You can't stop, liberty and freedom that is sort of built into mathematically to the code. Although I do agree that this administration is not good for Web3 and good for Americans. There are definitely some better options. And hopefully people will take a look at people like RFK Jr. and Vivek Ramaswamy. Next up, the ECB being community noted on why Bitcoin is better money than the euro. So I thought this was really cool. Isabel Schnabel, the digital euro is public money issued directly by the European Central Bank. Bitcoin is different. It is a speculative asset that does not fulfill, and she couldn't quite spell fulfill here, fulfill the characteristics of money. Hashtag ask ECB. Clown world. They don't even check their tweets here, right? They can't even get basic spelling errors in a sentence or two. And I love the community note here. Readers added context they thought people might want to know. The digital euro, in fact, does not and cannot fulfill 3 of the 6 characteristics of money: durability, scarcity, and acceptability. Bitcoin, on the other hand, fulfills all 6 characteristics of money. I do agree here. I think the community note's a little bit off here where it says durability, where it talks about monetary debasement. Actually, monetary debasement is part of the scarcity aspect of the unlimited supply. But let's touch on this a little bit, right? Let's talk about this, right? These characteristics of money, right? So one of them being durability, right? If you have Bitcoin and you have it in a wallet, right? That Bitcoin is never going to degrade. It's never going to go bad. It's going to be there forever, right? So that has the ultimate durability, right? Whereas, a 20 euro note, for example, is going to get worn. It's going to break down. It's going to eventually get ripped, and it's going to degrade. It's a piece of paper. Bitcoin obviously wins there with durability. Next up, we've got, I don't think they mentioned it here, we've got divisibility, right? So, like a 1 euro note, you can divide into 100 euro cents, right? You can break down this thing into cents. That is divisibility, right? And one of the main reasons gold sort of failed as a money was the fact that it was very hard to divide it, right? So it allowed it to sort of be centralized at these bank hubs where they issued notes off of it, right? To add that element of divisibility to it. And that was ultimately the sort of the Trojan horse that allowed the whole system to be hijacked by central banks and governments to sort of abuse this idea of money. But if we compare divisibility directly with Bitcoin and we compare that to a euro note, each Bitcoin can be subdivided into 100 million subunits and then called Satoshis. And actually it could even be subdivided further, right? So it's just a portion, it's simply, code and math there, where you can sort of subdivide this. Whereas a 1 euro note can only be divided into 100 cents. Same with a dollar, right? 100 cents is $1. That's the lowest element of divisibility, right? So, Bitcoin wins again there on divisibility. Next element is scarcity, which they do mention here in this note. And scarcity, Bitcoin is the first absolutely scarce asset in history, right? So it's this idea of absolute scarcity, which most people can't even comprehend. Whereas, here you've got the monetary debasement, you've got the unlimited supply of the euro and the dollar, right? Where they can continue to print them out of thin air, right? Bitcoin wins again there on scarcity. So if you look at history and we see different monies interact with each other, the monies that were more scarce obviously always won because they allowed people to sort of protect their life energy and purchasing power for longer. When European settlers came along the coast of Africa and started trading with people there, they realized that these people are using beads and shells that could easily be, counterfeited, right? And they were able to sort of expropriate a lot of that wealth by going back to Europe and basically, mass producing these beads, mass producing shells, etc. And we saw the same thing with Native Americans here in the U.S. A lot of people don't know that when colonists first landed in the U.S., they actually used shell money. The first loan that ever came from an American bank was actually a loan of shells. So this idea of shelling out, we've got a lot of vernacular, right? Are you going to pay for dinner? Are you going to shell out for dinner, right? So there's a lot of that left over, right? A lot of that sort of those terms, colloquial terms, right? To sort of cap that up, Bitcoin is the scarcer money, right? It does not have this unlimited supply. It has this hard cap supply, which brings us to another characteristic of money, which is portability. Which isn't really mentioned here. You've got, portable. How portable is your money, right? So Bitcoin. Let's compare the portability of a piece of paper that is a 20-euro note, right? I guess you can put it in your pocket, you can carry it, but if you want to send that around the world and have it settle instantly, right? Even if you put it into an ATM and you use a wire, it's not going to arrive quickly, right? It might take a day, 2 days. It might take 3 days if you're sending it across the world, because different banks or middlemen are involved, massive fees, although it is way more portable than something like gold, right? Because gold's you're going to have to physically take that gold, put it on a ship, send it around the world, hire your security guards for it. So there is a higher level of portability there for fiat money. Although, Bitcoin has the ultimate portability, right? I can send 100 million fiat dollars worth of Bitcoin around the world in a couple minutes and it's there, right? If you're using something like the Lightning Network, it will be instantaneous. But if you use Bitcoin's base layer 1, it'll be there in, roughly 10 minutes, right? And you'll have that final sort of settlement that, you wouldn't have otherwise, right? So portability here, Bitcoin wins again. You've got prevention of counterfeiting because everybody can tie into the blockchain itself and look and see if that Bitcoin is real. Whereas with fiat money, a lot of people speculate that the majority of paper money is actually fake, which is crazy, right? But then if you go down the rabbit hole and you learn a little bit more about it, most money is not actually even physical. It's not a blockchain where everybody can query. It's actually segmented off into these individual bank servers. So they say about 98 to 99% of fiat money is actually not even real. It's not physical. Doesn't even technically really exist aside from being on centralized bank servers. And of the 1 to 2 to 3% of money that is physically real, they say that a large portion of that is actually counterfeit money. There's really no cap there on the supply constraints, whereas Bitcoin is much superior on that front. And finally, we get to this idea of acceptability. I actually somewhat disagree here that acceptability for the euro is worse currently than Bitcoin. I think Bitcoin is continuing to be adopted and it can be used anywhere in the world. I see what she's saying here with limited regions of use, like people in America won't really use the euro or people in China won't use the euro. But I would say acceptability wise, there's more current, finance and trade done in the euro than there is in Bitcoin. But we are seeing that acceptability of Bitcoin all over the world increase. And I think that's just going to be on an exponential curve upwards, right? So I think as time goes on, maybe not exponential, but, the acceptability of Bitcoin, if you look at a chart of people using it and the acceptability across the world, it's just sort of up. It's never down. It's just up, right? So that's going to continue. And I think Bitcoin eventually will, obviously as the hardest money the world's ever known, will sort of take that role. It will win on that front eventually. Let's move on here. Here's a take I had yesterday. And, over the past couple of days, I've sort of been thinking of this. So obviously not financial advice, just speculation on my part. But I said, I think we're going to see capital rotate into ETH here in expectation of an Ethereum ETF approval Q3 2024. ETH has been trading down via Bitcoin over the past year. This will likely swing back the opposite direction. Not financial advice and just pure speculation here on my part. Extremely bullish both assets. It takes me to our next tweet here by Ryan Selkis, which the grayscale trade is dead. And a lot of people, what this actually was the fact that sort of this discount has sort of closed here. The grayscale trade was this idea that, if you bought the Grayscale Bitcoin Trust, you were actually acquiring Bitcoin at a discount because it was trading. The amount of Bitcoin in the trust was a lot more than the actual market value of owning GBTC. And as you see, as the ETF approval got nearer and nearer, that sort of gap as the expectations for the Bitcoin ETF got closer and closer and closer to being approved because GBTC, the trust, was going to be able to convert into this ETF where they'd be able to sell Bitcoin. If the value was lower, they would sell the Bitcoin and instantly realize the cash. So it would be inefficient for the market to sort of value it less than what what the underlying asset actually is, right? It should be trading at pretty much close to parity. But with Grayscale, it wasn't for a long time. At first, it was trading higher. It was trading over. It was actually trading at a premium because most people in Wall Street didn't actually have a way to sort of access, Bitcoin at scale there, aside from holding self custody. And then we saw this sort of negative, and then finally we've seen this discount, and then we finally saw this correction as we get ready to convert to the ETF, right? And the second one here is actually has to do with my last tweet here. Is you actually see the same thing sort of happening here with the Ethereum trust. So the Ethereum, the ETH is trading at a discount here. Ethereum is trading at a discount in the Ethereum e-trust that Grayscale has, right? So we're still at like 11. At one point, it was over almost 50%. That is just insane. So basically, it had 100 Ethereum in the trust, it was trading for 50% of the value of that 100 Ethereum. So if 100 Ethereum is worth 2.5 million, it was trading at 1.25 million, even though there was that much Ethereum in the trust, right? It doesn't make sense. And here we have a similar situation where the Ethereum in this trust is trading at a discount, right? So if you sort of buy this trust and you hold this ETH and the Ethereum ETFs get approved in the future, you're going to have an opportunity to sort of realize a quick gain there of 12% more Ethereum than what you actually purchased here in this trust, right? And of course, there's fees and little things that sort of factor into this, but it's still sort of an opportunity to get a little bit more Ethereum than you normally would, right? So I think that now that Bitcoin ETFs have been approved, I think Ethereum ETFs are inevitable here. The question is just a matter of when, right? So I think in anticipation of that, we're going to see capital sort of rotate into Ethereum. And I think Bitcoin is going to go up, Ethereum is going to go up. I just think that on a relative basis, you'll see a higher appreciation with exposure to Ethereum over the next 6 to 12 months. And that's just a speculation. Next up, in case you doubted that Bitcoin is for everyone, the French art house community just voted a short film about Bitcoin's unique ability to capture stranded energy as top documentary short film at Cannes. Very cool. Stranded, interesting film, sort of a documentary going to show how people in remote areas who are producing energy, they can sort of capture some of that value by storing it in Bitcoin, right? So when the community, we see this a lot in Africa, where they might have some hydro production where they're producing say 330 kilowatts of energy or 300 kilowatts of energy, and most of the time nobody's using that energy, right? That energy is being vented into the ground. Essentially, the hydro energy is just being vented away, right? So these communities, and then maybe at one point during the day they're using 80% of the energy, right, at night or something like that, and the rest of the time it's just being wasted, right? So Bitcoin, sort of putting Bitcoin miners there when it's not being used, sort of allows these communities to sort of capture that energy and store it in this sort of digital gold, this digital money. A really interesting thread that I found from Balaji, and he's been putting out a lot of great content and got a great sort of thoughts. History is running in reverse. The Bitcoin ETF is the spiritual reversal of Executive Order 6102. Back in 1935, they seized the gold, but now digital gold is back. 90 years ago, FDR and his fellow travelers rode the 20th century arc of centralization. The choke points of then new technologies for mass media and mass production allowed them to gain trust over the population, recruit top talent for their brain trust, and seize the gold after a series of epic legal battles. Those gold clause cases are forgotten today, but received as much contemporary coverage as 9/11 or the moon landing. They were the most important issue in the country, receiving far more coverage than seemingly comparable Supreme Court decisions like Roe v. Wade. Why? The reason is that the transition from a gold-backed to fiat-backed system was comparable to a soft communist revolution, as the visible seizure of gold laid the groundwork for the invisible seizure of wealth via money printing. And the classically trained judges at that time fully understood this. Justice McReynolds' then famous dissent denounced the ruling in the harshest terms, noting that the Constitution is gone and the dollar may be 30 cents tomorrow, 10 cents the next day, and 1 cent the day following. Interesting little note she put out here. It seems impossible to overestimate the result of what has been done here this day. God knows I do not want to talk about such matters, but it is my duty. The Constitution is gone. This is Nero in his worst form. We are confronted with a dollar which has been reduced to 60 cents, which may be 30 cents tomorrow, 10 cents the next day, and 1 cent the day following. Really fascinating take here, right? So Nero was a Roman politician and emperor, I believe, and was largely responsible for a lot of the sort of debasement of the currency during the Roman Empire. McReynolds was right. While the court was forced into a grudging institutional surrender by FDR's threat of court packing, the gold clause case affected every economic decision maker in the country, as it amounted to the U.S. government explicitly defaulting on its bonds by seizing the assets of its citizens, laying the groundwork for the century of monetary debasement to come. So here you sort of see a dollar's worth, a purchasing power of the US dollar, and you can just see how the dollar is continually debased, wealth is continually stolen, and your dollar can buy less things. Now, all of that is unwinding. FDR's team could ride the wave of centralizing technology that built giant states around the world. But today, technology favors decentralization, personal computers, end-to-end encryption, mobile phones, and of course, cryptocurrency. Thus, top talent isn't being pulled into a government brain trust, it's being brain drained out of the US establishment, and as a consequence, the epic legal battles are, on balance, going our way. It's not just the DC Circuit case. The ideological conflict between decentralization and centralization is reflected in the 3-2 vote for the Bitcoin ETF approval itself. Reed Pierce's brilliant pro-liberty approval, Crenshaw's dour denial, and Gensler's reluctant approval. You'll see echoes of the gold clause case, but in reverse. This time, it is the centralized state that is being forced into a grudging institutional surrender, and a surrender it is, as Crenshaw's dissent makes clear. There is no primary regulator for the Bitcoin spot markets. Spot Bitcoin ETPs will be participating in an unregulated, fragmented, continuously traded global free-for-all. Even if they were a primary regulator for this market, much of it could be beyond the reach of U.S. regulation. Let that sink in. This is what the U.S. establishment truly fears. Not Bitcoin as fraud, but Bitcoin as freedom. They want to rule not just you, but the world. So they're scared of the prospect of a global free-for-all beyond the reach of U.S. regulation. And they know that any spot ETF will bid up the price of self-custodied Bitcoin outside their control, as Satoshi intended. Since FDR's seizure of gold, our lives have revolved around the centralized state rather than the decentralized market. The state has had control for so long that we've forgotten what freedom is like. But now gold is slipping out of their hands and back into yours. History is running in reverse. And with that, I'll close out with a meme here. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.